Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. The consumer sentiment numbers came out today. Not so pretty. We're going to dive into that. Let's go.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob, tell us about consumer sentiment.
Yeah, what's really interesting to me, Phil, before I jump into that, is that we've had now what I would consider bad news should be good for the market, for the last 3 days. And we've had nothing but grief in the markets. All the liquidity plays are being sucked down. You have the energy stocks, you got the crypto stocks, you got the crypto miners, you got crypto, you got gold and silver miners, copper, everything's getting sucked down. It's like those guys are like in recession mode. At the same time, SPY keeps trying to push up to all-time highs. So it's really a weird situation. But I think what's concerning, and I think what's going to ultimately win after we get this summer pump, which we're definitely going to get the pump, is that the thing on the consumer report, which missed by 7 points, Phil, was the durable goods order. I mean, look at this, buying conditions for durable goods. I don't think it's that people don't want these things. People just simply can't buy these things. So they can't buy a home, they can't buy a car. Now what they're saying is I can't buy anything that's going to last more than a year.
Right.
So we're talking refrigerators, washing machines, dryers, things of that nature. Anything that you're going to put in your home, probably even businesses too. Hey, I'm not going to buy, any kind of equipment. Maybe I'll just rent and lease what I have to use because I'm unsure what's going on in the economy. So this is bad news because this affects manufacturing. Manufacturers have usually higher paying jobs. And I think that the reverb is continuing, Phil. The other thing weird too is that we've had TLT falling here for the last couple of days, but the real estate bear funds are increasing, so this is some really odd things happening in the market right now.
Well, on the TLT thing, until you go into the recession trade where bonds go inverted to the S&P 500, they're going to still trade with the market. So I think that's why you're seeing that. I think the 88 level is still important. I think that is where a lot of the size came into the market, and I think they're going to probably defend that area. But yeah, like the S&P 500 has been doing great, right? Wolf's been doing a lot better than, let's say, the rest of the crypto crowd has. Alts have been getting pretty hammered. Bitcoin can't find a bid. I think it's a temporary disconnect. You don't typically want to be short Bitcoin, especially in the last 2 weeks of June. Here we are, middle of June right now. So I'm expecting to see basically a change in character starting next week on that. But that doesn't mean the consumers doing good. And I doubt we're going to, I think what that means is you'll probably see less retail participation. You might get some FOMO if we do get that blow off move. But a lot of that's going to be done with higher leverage institutional flows. The money coming into, say, Bitcoin ETFs has been very strong, right? We've had a lot of inflows, and the supply on the exchanges has been dropping quite a bit. And the thing with that is there's usually a lag from the reaction in price. So I think we're in that lag period. I think we'll see that catch up move, but I don't think we're going to see like a big retail pop. Maybe there's some FOMO, like I said, as things get a little more frothy, but I think largely the institutionals are going to be driving money into the larger crypto plays. So Bitcoin and Ethereum, Solana, I think those are going to lead the charge, and maybe not so much in the meme coin category, right? You might get some of that, but I don't think we're going to see a broad crypto alt rally because I think, the consumer that gets into those lower cap plays isn't going to be there like it was in 2021.
Well, look, you never short a market where the hedge funds are max short, right? I mean, they're on borrowed time.
Right.
And so the game they're playing is they're buying Bitcoin, they're shorting it to get best price.
Right.
So these guys could be out at any moment, and you could be sitting there with your thumb in your mouth getting liquidated on the short side as retail. So you just kind of got to wait this out. we also noticed in the gold and silver market, it looks like open interest is falling. So that means probably, they're starting to wind down their short bets if they had them on. Usually the tell is not when they start covering their bets is when you start paying attention. And I think we're going to see that. But, we know that seasonally it's choppy here for the next 2 weeks. It's just that you got a position for July and August. But there's some trades out there. It's just that the things that everybody listening to us on, the things that we like are really getting attacked pretty hard right now. ExxonMobil is my biggest position. How does a behemoth go down 10% in 4 days, right? When oil is going up, natural gas has been stable, so it's just, to me, what that's telling me, July through September is when the oil markets take off. They're shorting ExxonMobil to shake out we can so that they can buy cheap for the next move higher. So you just kind of got to ignore it, sell calls when you can, and just sit back. But I'm more interested. Consumers aren't going to start coming back just because the stock market's going to go up 7% in 2 months, Phil. Most of the people that are giving you this warning on the consumer sentiment aren't even in the stock market anyway, and all they're doing is getting ground to death.
And the other thing with crypto is the DXY. I think with the DXY, until we take a chill pill here, which we might, 105.50 on DXY is kind of a spot I've been looking at where if this thing is going to stop, it's going to stop there. We did bounce over it a little bit here. So we'll see if the dollar starts to come down from these levels. If it does, then crypto probably takes a break from getting hammered. And then we should see dollar continue to decline if that's the case. If the dollar peaks out here, we would see a run down to 100, and then if we break 100, I think that's where you're going to see the yield curve steepen and go positive, and that's your blow off area below 100 on DXY, and that's probably going to form a long-term low, and then you're going to see the DXY start to grind back up. And I wouldn't be surprised if we saw it go back to the 120s, which was our last high area, as we get into the recession. And when we get into a recession, the whole world's going to be sucking wind, so you kind of go to the best of the sick puppies, and that's going to be the dollar. And I think you're going to continue to see it strengthen during that time.
Yeah. It's the flat earthers that say the dollar is going to die. Just take a look at it. I mean, Canada and Europe is already bailing out. Asia is pathological for killing their currencies. So, King dollar, and you're right. Once we go into recession, people don't understand how the currencies work. There are dollars and there are dollars. So, a lended dollar is still a dollar. And if you default on that dollar, pay it off, that dollar gets extinguished, which means there's less supply out there. So, unless the government can overcome that or consumer borrow more than that, it's going to be a battle, and it's going to give the dollar strength. Look, when the dollar finally rolls over for good, the world's going to be in a hurt locker anyway. So people just need to take that one off their worry list completely. There's plenty of other things to worry about, but the dollar going to zero is not one of them. I wouldn't worry about the BRICS at all. I wouldn't worry about Saudi Arabia at all. Just ignore that. That's just noise, okay? The dollar is king dollar, and it's going to remain king dollar until fiat gets extinguished across the board.
Guys, let us know your thoughts on our show today. Put them in the comments below. And if you need help navigating these markets, head over to tradegenius.co. Check out our specials there. You can get into the room with Bob and I and get our take on the markets from day to day. Thanks for watching, guys. Thanks, Bob. We'll see you guys on the next video. Take care.
Trade Genius.